The first question on the exam covered doing journals and ledgers, or at least making sense of the ones you were given, and looking at returns of stock. So basically the situation was the business that you were doing the analysis or the question for was called Ocean Blue. They have customers who they sell goods to, and the customers give them money. So the first question that you were asked was to record the additional information in the general journal provided, and note it said that narrations are not required. So the first thing that was you were asked to do was on the 16th of February, D. Edger received a credit of $660 including GST for stock returned from the sale on the 6th of February. The other transaction you were asked to process was on the 27th of February. T. Wilson was declared bankrupt and will not be able to pay the outstanding balance. So that first transaction on the 16th, D. Edger received a credit of $660 for the stock return on the 6th of February. So you needed to go and look at the sales journal, and it said on the 6th of February there was a total sale of $2,400 plus GST to this debtor. And what's happened now is that $600 of that stock, or sorry, the credit of $600 plus GST has been issued, and that is a sales return. So what we're going to do is a debit to the sales return ledger. It's a negative revenue, so it goes up on the debit side. We're going to credit that customer their GST back. And what's good about this question from a teaching perspective is it only got you to credit part of the sale, not all of it. So we're only crediting, what's that, about a quarter of the sale, not the whole thing. However, the principle is still the same. On the other side of the ledger, on the other side of the debits will be an entry to debtors control. We will decrease the amount that debtor owes us by $660. Now whenever we touch debtors control, we need to make an entry in the subsidiary ledger. Then we need to undo the cost of the sale. So we originally recorded an increase in cost of sales, a decrease in stock. Now we've got to have the stock coming back in. The customer's given it back to us, and we weren't given that number. So what we do have though is up here cost of sales $1,200. However, that was for the entire purchase. Now the customer's not going to return all of that, so we need to figure out how much they are going to return. So we were given this bit of information. In the question it said, stock is purchased on credit and sold for both cash and credit with 100% markup on cost. So that must mean if we're giving this customer a $600 credit, the stock that was marked up at 100%, the stock coming back in is $300, and that will decrease cost of sales by the same amount. On the 27th of February we had a bad debt, but we weren't given an amount. So what we had to do was go back to the start and figure out how much T. Wilson owed us by the time they went bankrupt. So at the beginning of the month, we were given the debtor balances. We were also given a sales journal to record credit sales, and a cash receipts journal to record any money or discounts that were received from the or given to the customer. So the first thing we were given was the opening balance. T. Wilson owed us $4,300. There was then a purchase on the 17th of February on credit, so that increased their account. They paid back $1,000, didn't get a discount, so that decreased it by $1,000. So by the end of the month, when they went broke, they owed us $6,710, and we'll record a bad debt for that amount. So we'll use the actual date in the journal, 27th of Feb. We'll do the bad debt of $6,710. We'll decrease debtors control, and we'll decrease the subsidiary account for T. Wilson. Looking at where the marks were for this question, there was 1 mark for getting the debits to sales returns and GST clearing, 1 mark for getting debtors control plus the subsidiary ledger, and 1 mark for the debit to stock and credit to cost of sales. So 3 marks for the sales return. For the bad debt, there were 2 marks, 1 to the debit to bad debts, and 1 mark to the 2 entries for debtors control and debtor T. Wilson. Looking at the mark breakdown, out of 5, the average was 3.3. 15% of the students got 0, 6% got 1, 7% got 2, 12% got 3, 21% got 4, and 18% got 5. The examiner's comments on this were to always use full titles in your journal entries. Some students thought the return on the 16th of February was actually a purchase return instead of a sales return. And in general, this question was handled well by the majority of students, and that's reflected in the pretty healthy average out of 5 of 3.3.